Right, let's start in Australia, where it's a unofficial holiday. Being there's a horse race down in Melbourne that the country stops for, called the Melbourne Cup. But more importantly, the RBA. Now, the RBA on Melbourne Cup Day are known to move interest rates, and the expectations is that today the RBA meet at 2:30 Sydney time, and the expectation is a 25 basis point move. Now that's a 75% expectation. The rest of the market expects a 50 basis point. I don't think we're going to get it. I think we'll just get 25. The fact that the Aussie dollar has been pummeled so much recently is effectively like an interest rate cut anyway. So I don't think we'll get another interest rate cut. I think we'll just get 25 basis points from low, and he'll wait and see how that goes. Further to that concept is that, look at this is the commodity market, right? So we've got oil off, gold off, iron ore smashed, coke and coal smashed, copper getting smashed. Whilst this index is up, that's because natural gas is up 11% in the last couple of weeks, or last week or so, as Europe comes into colder weather, and that is a big export market. LPG, liquid natural gas, is a big market for Australia, but not as big as iron ore, coke and coal, or copper, and or gold. So while it's bigger than our gold export, but you get the theme is that picture doesn't look good for commodity markets, but in particular Australia. So not a fan of buying Aussie, even if they raise it by 50 basis points today. I still wouldn't be buying Aussie. I'd be looking, if that market gets a rally off that, I would be looking to fade it. I think that the Aussie is going to struggle over the next couple of months. I have made a claim before that it should be at 58 cents. I certainly think we're going to see 60 cents before we'll see 65 or 65 again. So we might see 65 again if there's a 50 basis points. But there's that bit. I'll be looking to be a seller of Aussie if there's that sort of technical picture that fits it. Wait until the RBA comes out. Other majors, we've got the FOMC coming out in basically 2 days' time, Thursday morning local time here in Australia, and I think that the market is 75 basis points move in the US is 100% locked in, and the market is now also trying to price in another 75 basis points for December, and then a pause, and then interest rates are heading down in February. I guess the market is sort of waiting to see. I note that Tyler Durden has this chart. Let me get the chart I want. Where is it? This one. So short-term interest rates, heading down. Expectations of where this is obviously inverted, of where interest rates are going, and you can see stocks get a rally before falling back down. So the stock market is hoping that the Fed will pause the interest rates and not be moving them, but we're going to get 75 basis points. So it's going to be a lot about on Thursday morning about what the press conference comes, and how what's in the statement, and how hawkish or dovish that is, and that's where you'll get the volatility. But we'll talk about that more when we get a bit closer. What I'm looking for is that bounce in the euro, right? So I still think we're in this little channel here. It's in my blue box. Looking for potential buying off this level, and if we can get that right now, all we're seeing is continue to see selling at the moment. So we need to wait and see. We see some buying coming into the market, and then we'll look to take that with us. the trick is going to be getting in and out before FOMC, because that could ruin any sort of trade that you're on. And that's about the picture for today. I shall see you again on tomorrow. Cheers.